1,030 to about 1,010, and last rally had kind of failed to get past that. So I think once we capture 1,030, the stock would give a 10-12% move easily on the upside. But I would want to buy once this gap is filled.
Okay, we just have about 30 seconds left for the markets to open, so we'll wait by for that. Remember, it's the fourth day of record highs that the market has seen yesterday, and in all likelihood, the Nifty will hold above the 23,500 mark today as well. Looks like it's going to be a really strong opening, 72 points higher. It's been relentless, the run over there. I'm looking squarely at the Bank Nifty because yesterday, all the focus was there. The Nifty Bank ended over 400 points higher yesterday. It's cruising above that 50,000 mark. So is that going to be the leadership pocket of the market? Is there going to be a lot of delivery buying there? That's the big question that we're asking this morning as well. Also, both FIs and DIs bought in the cash markets and large buying at that. There are some large block deals that are taking place as well. So there's a lot of action in the markets lined up this morning. So let's wait by for the opening bell. That's the first tick that you're seeing on the screen. Good going, 30 points higher on the Nifty, 100 points higher on the Sensex. The Midcap index is up about 100 points as well. The Bank Nifty is holding on to the 50,500 mark with a bit of ease. But there is no big bang opening. It's just consolidating with a bit of a positive bias right now. So 25 points higher on the Nifty. Decent morning opening, holding on to its gains from yesterday. What are the top gainers? Power Grid, Tata Steel, Tata Motors, ICICI Bank are topping the charts this morning. You have IndusInd Bank as well, that's up about 0.5%. And technology stocks are coming back. So, Nvidia is the big global story, of course. But back home as well, Infosys, Tech Mahindra, all of these stocks are up in the green, up anywhere between 0.5% or so. ITC, Reliance are a couple of other heavyweights that are holding forth this morning. Now the market is flattening out a little bit, about 20 points higher, so just hanging on to its gains from yesterday. What's dragging the market is Hero MotoCorp is down 1%, Titan is down 1%, Shriram Finance, Grasim, M&M, Bajaj Finserv are a couple of other names that are trending in the red right now. Axis Bank is another one, Bajaj Finance and Finserv, as I said, Divi's Labs also just trending a tad bit in the red. But either way, it's nothing alarming. It's just flat terrain for the market. Let's see how the rest of the day shapes up. We don't have any, global cues as well. The US markets are shut. But this is once again fresh record highs that we're seeing in the market and not looking bad at all.
Well, that's right. So now just take a look at the broader markets, though. Paras Defense, the first minute of trade, it's up 10%. The stock is up more than 60% in this month itself. So that continues its northward direction, up 10% as we speak. Azad Engineering, that's the other one that's locked with a gain of closer around 5%. So both these two have been doing well. They continue their upward trajectory. Lurch Avenues Tech, I think that's the new kid on the block. Well, that stock is up and about in today's trading session. It's seeing follow-through buying up more than 10%, 15% now as we speak. So big up move is what we're seeing out there. RCF, I think there's a bit of an uptake on ammonia prices, and there is hope there'll be some rationalization, or there'll be some, kind of breathing space on GST. So that stock is up close to around 8%. I recall a month or so ago, we had highlighted here in our morning chat that one was moving quite well, breaking some technical levels, and also good delivery-based buying at around 155 rupees. Or today, the stock is up close to around 8%. Two stocks that are reacting to large trades. You have Sansera. That stock is up close to around 5% post the last trade. And Windsor Machines, small stock. We normally don't talk about it too much. But 85 crores of block was changed today in pre-open. So that one as well, Windsor is up close to around 8% odd. Nandan Denim, another stock that's up close to around 5% as we speak. So keep an eye out on that one. And on the flip side, you have Shoba. That opened with a cut of close to around 3%. So that stock comes up for you. And Gland Pharma, as we saw, that block just took place. So that one as well under some pressure.
Okay, lots and lots of blocks. All those blocks on the Gland, on Indus Towers, all of them have been sort of in the process of getting executed. Different deals taking place. Even on Ixigo, that 13% up move, there was a block in right up in the morning itself. So blocks are really keeping the market buzzing. The other area is fertilizers. So it's sort of a double bonanza. Monsoons are moving forward. And the fact is that there is this chatter about perhaps a GST rate cut as well on fertilizers. All of them. That's the sector of the day, really. Look at FACT, look at Chambal Fertilizer, RCF, GSFC, NFL. Pick any fertilizer stock and you'll get gains between 5% to double digits, almost 10% in some cases. Some of the names on the defense side continue to look good. Dredging. By the way, there are lots of blocks on a lot of defense companies, Paras included. Paras has been extremely active last couple of sessions. Again, this morning, we've seen blocks on that counter. So defense is a very, very active theme. Fertilizers looking extremely good. Beyond that, let's see what else stands out. In terms of the top volume charts, Zomato is having a good morning, 2.5% up on Zomato. Then we have a couple of PSU banks, which are not too bad. Look at Union Bank, Bank of India, some of these names on the upside, even a J&K Bank. So there's some buying on the PSU banking side. The Nifty on the whole has stabilized. It's not a flying start, just about a 30-point up move, but it's not bad. By the way, Titan isn't reacting to the Motilal Oswal price target. I'm not sure how much they increased their target price by. They're always very positive on Titan. But anyway, that stock's under pressure, 1.5% on the lower side. A lot of auto stocks are seeing a cool off after the recent rally. So Hero Moto, Bajaj Auto, even M&M. These are the names where there's some profit taking that's away. By the way, of course, look at metals, because Manisha was alerting us about this, that metals, overnight there's been a rally in prices. That's showing up on the stock side as well. JSW Steel, Tata Steel, these are the top winners on the Nifty right now.
I just also wanted to mention two more stocks. Varun Beverages is one of them. It's at a fresh high this morning and the stock is up almost 3%. So just pull that up. CLSA, in fact, has, look at that, 2.5% higher. CLSA has raised their target price on Varun Beverages to 1977, which is a big upside to the current market price. And they have raised their target multiples from 48 times to 59 times. So big up move on Varun Beverages. Of course, we've spoken about that earlier. But CLSA talks about increased affordability and new territories and products to sustain growth. And the other one is DMart. Continues to be in the news. Fresh highs over there on DMart. Just pull that stock up for you. Avenue Supermarts now at 5,100. So some of these consumer names are looking pretty good. Volumes are also picking up on them.
Sonia, just pointing out, the Midcap index has slipped. It's in the negative. Yes. So today is a day where it's not all flourish. There is some caution and there is some consolidation. And maybe that's exactly what the doctor would have ordered as well. Broader markets, a little quiet. Let's see, about a 50-point dip on the Midcap screen. Advanced decline ratio is still positive. It's very early in the morning, so we'll have to see how this plays out. Actually, even on the Nifty, thank the banks today. If it wasn't for the banks, the Nifty would be in negative territory. It's about 15 points higher. The bank Nifty is the one that's still trying to keep the cheer going. IndusInd, ICICI, these are the names on the upside. And technology, like Sonia mentioned. So some gains, and they are very not very big gains. We're just talking about 0.5%, 0.25% kind of gains on these stocks. But yeah, a little tricky. Let's see how this plays out. A little quiet on the screen as of this moment.
Well, that's right. But the fertilizer stocks that you were talking about, just take a look at that. That's the sector of the morning, actually. RCF up 11% now as we speak. So they've opened up, gap up, but they're building onto the gain. Chambal Fertilizer 7.5%. Fact is up. NFL, that's another stock out there. You have a couple of other names as well, like GSFC. Some of these stocks actually opened up a little bit flattish with the mild positive bias. But these stocks, now they're flying away as we speak. And big up move is what we're seeing on a lot of those names. Well, the Indus Star stock is still down close to around 2.5%. Also keep an eye out on that one. Some very small part, I think, of the block got done. We'll have to wait by for further clarity. But the sector of the morning, in terms of the reason why the Nifty is up right now, is because of the Nifty Bank. That's moving to a fresh all-time high. And building on yesterday's 450-point rally, it's up another 350 points. So that's clearly the big heavyweight in there that's batting for the Bulls.
Oh, absolutely. And that's the one that's keeping things up. Well, the market opening is before us. A little bit of a wobble, but looks like it's okay. Bulls still in control. Manish Santhalia of MK Investment Managers is our market master on the show today. Manish, great to have you on. The market's gone through a lot, but bulls have still retained their firm grip, right? What do you make of things and the manner in which liquidity is coming in? FPI buying has picked up, which is why we're seeing banks finally turn green as well. What do you make of the overall structure and the construct of the market post-elections now?
Yeah, so roller coaster ride post-elections, election verdict on the exit polls and then the actual verdict. So the pendulum has swung from greed to fear to greed to now FOMO is what I reckon. A lot of buying happening post-election results. We've seen the SIP flows. So I think it's a fear of missing out, playing out in the market. Those who wanted to buy are getting into the market. Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at best for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. There's nothing to really call out that, things are getting excessive on the overall market as a whole. But yeah, I mean, the thing to watch out for would clearly be the budget and if there are negative surprises.
Okay, Manish, I'll come back to our markets, but I wanted your thoughts on what's happening with Nvidia and, all the big tech stocks globally, right? I mean, all Indian investors are wondering how they can participate in the rally there, not just with Nvidia, which of course has played out. There are so many other companies, whether it's, some of the big tech companies, where it's something like an Applied Materials, which is, of course, in the semiconductor space, that's rising as well. Now, for an Indian investor who's looking to put money to work, there are many mutual funds that have exposure to these global names. Do you think that's the best way to approach it, or do you think that story has played out already in big tech?
I think the only way Indians can get exposure to overseas market is through LRS or through mutual funds where they're already invested, because I believe limits are almost full for overseas investments in most of the mutual funds. So that's the only way to invest and in overseas through the LRS, through individual, names, individual files where you could invest $250,000 per person. That is the only way out. As far as the overall IT space is concerned, I read that there's a lot of divergence. Few of the large caps are the areas where there's a lot of buying or bullishness, but the rest of the market is actually falling behind in terms of the Nasdaq construct as we read. Not too much of an idea about what is happening out there, but yeah, clearly, Nvidia is off the charts. It's clearly flying away to glory, so to speak. So, and of course, that's going to have a repercussion, globally as well in terms of tie-ups which this company has all over the globe, including India. So, overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India.
Hi Manish, good morning and good to see you. And when Nvidia, what it used to make it an entire year, now in a single quarter it's making twice of that. That's the kind of financials as well that have been coming up, and the stock has moved just one way. I wanted to ask you, Manish, about the telecom space. That's suddenly come back. For those that applied in the rights issue, they're quite happy with regard to Vodafone Idea. But how do you approach this theme? We have a tariff hike that's in the works, and all probability the next couple of months we should hear about that. So that's a tailwind for the entire sector. But how do you play it?
Yeah, so tariff hike, is getting priced in for the all the three names that you have, the leading ones. And obviously a lot more has to happen in terms of, getting Vodafone Idea to justify the fundamentals. A lot of legal cases where the dues are there should either be having some sort of a moratorium going into future number of years or some sort of a waiver. A lot of positive announcements or judgments that should come in their favor to justify 10 times EV to EBITDA 2 years out. Because, and plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must, act in sync. That's going to be the one monitorable. And then it is about the dues that need to be paid. Clearly, the third player will have to have a lot of positive announcements in this regard to justify fundamental valuations. But mind you, telecom is some sort of a utility sector. We can't really be having a 15 times EV to EBITDA 2 years out in terms of valuation. I don't think those sort of valuations do sustain. But anything like 10 times EV to EBITDA on a FY26 numbers, you'll have some reasonable upside even from these levels.
Okay. By the way, checking Zomato, stock's extremely active. Good volumes, 2.5% higher. Yesterday, Zomato also officially released to the exchanges that it is indeed in talks with Paytm for their entertainment business, the going out business, as Zomato calls it. And of course, the stock's now racing towards the 200 mark. Give us some ideas. I don't know, you won't talk stocks, Manish, but some thoughts. We were speaking to a defense analyst just a while back, and the grouse there was that valuations are so high. He likes a lot of businesses, but he has hold calls. He says, I can't issue a buy call looking at the valuations. And on the other side, you have a lot of these, consumer-centric, newer age businesses that have actually turned around very well. We're seeing some of the jewelry stocks react quite well to some buy notes this morning as well. Just some thoughts on where one should be looking in this market beyond the obvious.
So one sector which, to my mind, will gather some attention is the housing space. Not yet fully priced in, but anything that goes into the housing part of thing, because it is the roti, kapda and makan. The roti, kapda has been taken care of. The makan is now the focus of attention. The PMAY has announced 3 crore new houses. The sector has seen some sort of a consolidation in the second half of last year. And I think a lot needs to be done for the middle class, the lower middle class, and the rural folk. In that space, I think anything to do with housing, whether it be building materials, housing finance, home improvement, real estate in any case is firing through but I'm not talking about actual real estate, but housing, ghar, for the masses. That is one area which is not yet priced to perfection. And, there's a lot of upside, assuming that. And my sense is if this sort of programs are taken by the government, you have, some sort of leeway given in the taxation part of things catering to housing even now, then you could see 20-25% sort of a growth. And in that regard, he's still trading at less than 1 PEG, most of the decent names, so to speak. So this is one area which I think has not yet seen the attention of the market. And of course, in the budget, the thing to watch out for would be how much of money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Okay, well, there's a sudden slide in the Midcap index, by the way, almost 500 points gone in the last 10 minutes or so. It's a 1% knockdown in the Midcap index. So I don't know what's led to that, but there is definitely some volatility that's kicking in. The advanced decline ratio as well has just turned in favor of the declines, almost 1430 stocks over there. And if you're looking at the Midcap end of trade, then there are plenty of stocks, that are seeing a bit of a crack. Some of these vulnerable names, but even defense names, BEL is down about 3% right now. BHEL is down about 2%. IRB Infra is down. IEX, NBCC, IRFC. So all your big gainers are now coming in for some profit taking. Manish, before we let you go, this rally has largely been led by large caps, but there's been participation from the broader end as well. Now, are you getting a bit uncomfortable about the broader market up moves, the valuation discomfort? And do you think the more prudent idea would be to stick to large caps over mid caps?
No, so on the contrary, I think the large cap, the Nifty 50, would have very full valuations once we approach closer to 25,000 levels on the Nifty. And that is just about a 5 to 7% up move from these levels. Having said that, certain sectors within the Nifty 50, which would see, and assuming that we are seeing FY25 clocking 15% earnings growth, which would be driven by BFSI, oil and gas, metals, and IT. These are the spaces where you will have cushion. Capital goods are priced to perfection. There is a lot of growth, but it's all priced in. They would see some sort of consolidation. Same goes with defense, cable companies, power equipment companies. I mean, all of that, it will see growth in terms of numbers, but these valuations are prohibitive. On the contrary, the broader markets, which is basically the mid-cap space, I'm not talking about the small-cap space or the micro-cap space, but the mid-cap space, there's a lot to pick and choose within sectors. And it's not about the index per se. Certain pockets of the mid-cap index also are priced to perfection or even excessive, but there are a lot of opportunities within the broader markets in terms of sectors and picks. So this is one space which will remain, in terms of your stock picking a lucrative area to look at. But that's how I would put it. I don't think it is large caps over mid caps. It is going to be mid caps over large caps, at least from the next 6 months point of view. And of course, we'll have the budget to reckon in between, and then we'll take it up from there, how the things look like 1 month from.
Okay. All right. Thank you, Manish, for joining in and speaking to us. One theme that Manish spoke about was the housing finance sector, which has been in focus after the government's push for affordable housing. So we'll talk about that. But before that, as I was saying, there is a lot of volatility in the broader markets. There's a sharp fall over there, especially in some of the defense stocks. So Hindustan Aeronautics, BEL, BHEL, that whole lot. Suzlon is down 1.5%. Indus Towers, by the way, is down 6%. So there's definitely some trepidation there. But getting back to the big theme of the day, which is housing finance, the cabinet has expanded the rural housing scheme. Additional 3 crore houses will receive assistance under the scheme. To discuss more on this cabinet decision and its impact on the housing finance companies, we're joined by Tribhuvan Adhikari, who's the MD and CEO of LIC Housing Finance. Mr. Adhikari, congratulations on the company's Founders Day, and thank you so much for joining us, on CNBC TV18. I wanted to start by asking you about your view on the affordable housing boost that has been announced by the government. Last time, how much did you receive from the government under the PMAY scheme, and how much had you asked for, and what, according to you, is the outlook now in terms of growth?
Well, as regards the announcement by the government, the scheme is still on the drawing board, not yet finalized. We've not received the finalized scheme as yet. We've been having a series of meetings with the ministry and the NHB, National Housing Bank. So expected that very shortly, probably in a month's time, the scheme will be on board. Yeah, as per the basic contours of the scheme, I think it's going to be more or less like the earlier PMAY, the Pradhan Mantri Awas Yojana, what we had. Well, in the earlier schemes from 2015 to 22, we had disbursed about 42,000 crores under the PMAY scheme, and it was quite a successful scheme, and we managed to reach out to a large number of people. I'm pretty optimistic about the new scheme also. I think it's going to give a big boost to the much needed affordable housing demand. There is a lot of demand in this sector. Unfortunately, the supply has been slightly on the shorter side. And I think it moves closer to the government's vision for housing for all. And it will have a multiplier effect, because housing is a sector which is labor intensive, leads to creation of jobs. Approximately 250 ancillary industries associated with the housing sector. So overall, I think it will be a big boost to the economy. It will give a big boost to the economy.
So, sir, just to clarify, you said 42,000 crores, right, was the amount that you received?
Yeah, that we had disbursed under the earlier PMAY schemes.
Okay, and how much had you asked for from the government?
Well, I think we had asked for 45. We got 42 and disbursed 40.
Okay, so what is the disbursement target that you have for FY25, FY26?
Yeah, we are looking at disbursing 75,000 crores of housing loans this year.
Mr. Adhikari, hi, morning. This target of 75,000 crores in disbursement, you're not factoring in the next round of PMAY in this, or are you? Because it's again a very ambitious plan, 3 crore houses.
Yes, but this is for the entire housing finance industry. Now let's see what is the share of the finance that we get, because it ultimately depends on that. We have in our discussions with the ministry and the NHB, we have said that approximately 25 to 35,000 units. We are in a position to disburse 25 to 35,000 units of PMAY loans in the current financial year. So that would all depend on what is the allocation to us. But being the largest housing finance company, I'm optimistic that we'll get a big share.
No, absolutely. Just to complete the point, what was your share of the previous version of PMAY? I mean, how much out of the total disbursement came to you?
Well, I don't have the exact figures. I think about our share would have been about in the region of 20%.
20%. And then again, coming back to that number of 75,000 crores of disbursements for FY25, right now that's just the regular business. You've not factored in the PMAY. So could this number be higher? Could your disbursements cross, say, 1 lakh crore? if the PMAY, next round also starts happening in the next
No,
couple of months?
well, to clarify this, I think, as I said, PMAY has not been fully factored in because I do not know what is the sort of assistance
Sure.
I'm going to get. But we have factored in about 5 to 7,000 crores of PMAY into the 75,000.
All right. Hi, good morning, Mr. Adhikari, and congratulations on the company's Founders Day as well. So wishing you and the entire team well. Well, let's get a couple of numbers out of the way then. The rundown in your book is quite high, and you're guiding for disbursements of around 75,000 crores, which most analysts are working with as well. What about the AUM growth? What can we work with for FY25, FY26? Some on the street are expecting a number between 8 to around 10%. Is that doable?
Yeah. Yes, we are looking at a double-digit growth in the current financial year. Last year, we had some challenges initially, but those challenges have been overcome, and I'm optimistic about a double-digit growth in AUM.
Double-digit will be around 10%?
Yeah, 10 to 12%.
Got it. All right, 10 to 12%. What about the NIM guidance? I'm reading a note which says that, you're gaining because of the floating rates. 50% of your liabilities are fixed. So what could the NIMs look like going ahead from here on, if you could give us the guidance?
Well, last year we ended with a NIM of 3.09%. We expect this to moderate a little bit this year, but not too much. Our guidance is between 2.7 to 2.9.
Okay. So I'll come back to your business in a bit, but before that, I also wanted your thoughts on the upcoming budget. There's, in the month of July. Affordable housing is a big space that the government has already given a push to. But from the budget, is there anything that you would be expecting for this sector?
Yes, definitely. The outlay, I believe, what was announced in the interim budget was more 24,000 crores for urban housing. Well, let's see. From what we're getting to hear, the budget the government may sort of hike this figure, because this is as I said, it is a sector which gives a boost to the entire economy as a whole job sort of addition to job building, and then the various other industries associated. So the basic feedback we're getting is probably the government could go a little bit higher than 24,000 crores, but let's see what comes up. Ultimately, it would depend on what is announced in the budget.
Okay, so what would, sort of make the street happy? Around 25,000 crores has been the ask, and anything apart from the overall budget outlay, the number, anything else that you would expect for the sector?
Well, we have been talking about a few things. We are in our discussions with the ministry and the NHB. We have been talking of some tax breaks, maybe for the builders, so as to add to the supply, and also something to do with the registration cost of the cost of registration, rather, which is at approximately around about 7%, slightly high. Maybe some stops in that would help the housing finance industry and the builder industry.
Final question, sir. I think your guidance for credit costs is actually an improvement. Tell me if I'm looking at the right numbers. I think you're looking at 40 to 45 bips of credit cost in this year versus 60 basis points last year. If you could just tell us what are the drivers here and what's the overall outlook on asset quality?
Well, the asset quality has been improving. Yes, unfortunately, we have had legacy issues in the past, and the asset quality was slightly, I think, skewed. We have been working hard last year, the whole of last year and the years before that. Asset quality has improved. There has been my GNPA has come down from 4.4 to 3.3 last year. This year, we see a lot of scope for further improvement. Total stage 3 book size is around about 9,500 crores. On the builder book, or the wholesale book as we call it, it is about 2,500. The retail is approximately about 6,500. So we're looking for a lot of improvement in the asset quality, hoping to come down nearer to 2% by the end of this year, as far as GNPA is concerned.
Okay, and credit cost will be around 40 basis points?
Yeah, that is what we expect.
All right, and finally, before we wind this down, what about return ratios? On a price to book multiple, well, the company is placed pretty well. But what about the ROAs and the ROEs? Should we be working with around 1.5% and around 15% on both these two parameters?
Yes, ROE should be 16 plus. ROE should be 16 plus. And ROA, yes, but the guide thing, ROA will be about 1.5 to 1.6.
Got it. All right, Mr. Adhikari, always good speaking to you. Thanks a lot for joining in here on CNBC TV 18. We'll hold you to those numbers. AUM growth of 10 to 12%. You're talking about asset quality improving and the NIMs in that vicinity of around 2.7 to around 2.9%. For the time being, though, we'll slip into a short break. On the other side, we'll get chatting with Mr. Keshav Bhajanka of Century Plyboards. Stay with us.
Welcome back. Well, we're looking at our next corporate conversation now, and the company in question is Century Ply. Now, the fourth quarter was a slightly weak quarter for the company, but Century Ply has given a double-digit revenue growth guidance for the current financial year. So is the target on track? And what's the demand outlook? To talk about this, we have with us Mr. Keshav Bhajanka, Executive Director of Century Plyboards. Mr. Bhajanka, thank you very much for joining in. Let's start by, talking about how the first quarter has shaped up for you. If you could just tell us about the demand trends and the volume improvement that you may be seeing, and just break it up across your different categories, laminates, plywood. What's going on so far in the first quarter?
Sure. Good morning. Thank you so much for having me on the show. I think, as we discussed earlier as well, what is happening is that there was a lack of inventory in the market, inventory in terms of the new housing that came into play after COVID, that was under construction and that had not really hit the market. Our job begins when it goes from a house to a home. So I think now the early signs are that new inventory is hitting the market. And I think this bodes very well for us. The current financial year, like you have rightly mentioned, is going to be a strong year for us. Our guidance across segments has been double-digit plus for plywood, 20% plus for laminates, 40% plus for MDF, and 25% for particle board. I think we're well on track to achieve the same and perhaps exceed on it.
But will it be patchy, Keshav? That was the question, because first quarter we've had elections, we've had this heat wave, etc. So just trying to understand, your full year targets are intact, but could it be off to a slow start? I mean, should we be prepared for that? So just some color on Q1 trends, please.
I think Q1 is looking quite positive, and overall we will be well within. We'll be in line with the guidance. Of course, there are some new capacities, for instance, the Andhra Pradesh project that commenced in March itself. So that will take time to ramp up. But overall, Q1 has been pretty much in line with what we had thought. One or two segments might face slight pressure, but overall, we will have a decent growth in Q1.
Okay, all right. Hi, Keshav. Good morning and good to see you, Ben.
Good morning.
What about ADD on imports on MDF? That's been something that the industry has been screaming out for. Is there an update on that front, and do you expect it to come in the near future?
Currently, I don't have an update on this. As you know, BIS will come into play from the first quarter of next year, the fourth quarter of this year. February is when BIS is likely to be implemented, and that is going to be a huge boost for us, because at the present moment, imports of an inferior quality are competing with us, which is hampering our ability to scale up. But as of now, there's no further update on ADD.
Okay, no further update on ADD. Got it. Can you tell us what is the incremental revenues that you could gain? Keshav, by the way, good morning and thanks for joining in. What are the incremental revenues that you see in FY25, given the kind of capacity utilization that you're expecting on your new plants? Because I heard you mention that you may exceed your guidance for FY25 as well. Once this capacity utilization comes through, then what is the incremental revenues that we're looking at?
So I would not like to quantify the overall figure, but like I've said, double-digit plus for plywood, 20% plus for laminates, 40% plus for MDF, and 25% for particle board. So weighted average, we're looking at a strong growth, which would be well in excess of 15%.
And would this also mean gains in terms of market share? Because in the plywood and laminate segment, you're sitting at about 6 to 7% market share. Is there scope to grow further there?
Definitely. As you know, there's a trend from unorganized to organized, particularly in the case of plywood, which is aiding us in gaining market share within the plywood space. MDF, with the commencement of the new plant, because till now we have been a predominantly north tier. Our capacity was in Hoshiarpur, which you know is far north. So now, with the commencement of a plant in South India, we are likely to gain a lot of market share in MDF as well, because we'll be a pan-India player. So I think overall, we will be adding to our market share.
Any internal target that you're working with? I mean, double digit, high teens, anything that you're looking at by, say, over the next 2 to 3 years?
Our objective has been to, maintain 25% plus in the organized space within plywood. And, well, when we look at that, we, I think, are more than that at the moment. As far as MDF, yes, we are looking to drastically increase market share. Because like at a 40% plus growth revenue industry that is growing at 20% means that you're gaining market share. Laminates, we have actually lost out in terms of market share over the course of the past 1 year, which we are looking to correct in the current year.
Keshav, let's talk margins, because in the plywood segment in the fourth quarter, your margins had come down. Laminates, they were okay. MDF also, there was a margin erosion. Now you're talking about, I think, margin improvement through the course of the year. What makes you confident that margins will recover? And give us some update on pricing as well, both volume growth and some indication of price movements so far in the first quarter, if you can.
Sure. So in terms of pricing, I think that we have taken an increase in plywood as of last month. And the basic hindrance to us is a lot of increase in raw material cost, which is likely to persist for the remainder of the year, or maybe slightly beyond that as well. Having said that, in terms of margin guidance, we are fairly confident that the guidance we have given for the entire year, which is 12 to 14% for plywood, 10 to 12% for laminates, 15% for MDF, and 15% for particle board, we will be more or less in line with the same. Of course, the objective will be to improve on that. The primary reason for a reduction in margins is the increase in timber cost, and I think this has not been able to be passed on to the market yet. Maybe over the course of the year we will be able to, in which case we can look at higher margins. But at the moment, this is the guidance we are going with.
So just to reiterate, you're saying that plywood, there's been some price increase last month. How much would the price increase be? And in the other segments as well, what is the likely price increase that you would be factoring in, considering the margin guidance?
In plywood, the price increase would be to the tune of 2%. Whereas in the rest of the segments, I don't see any potential for price increase at the moment. Perhaps, as I said, over the course of the year, if there is scope for price increases, we should.
Okay, all right. Final question, Keshav, before we let you go. You're going at a run rate of around 1,000 crores, 1,050 crores odd per quarter. So that makes it around 4,000 crores on an annual basis. But as you mentioned, you had a couple of units that have come on stream. At peak levels, what is the revenue potential the company can do?
I think for our Andhra unit at peak potential, we should be able to hit a revenue of close to 1,000 crores. And this is going to add to our top line substantially. Once the new particle board unit comes into play, that also can look at a 500 to 600 crore revenue increase. So I think these two units are going to be large revenue drivers for us in the near future.
Okay, before we let you go, any expectations from the budget this time? The full-blown budget kicks in July. From a sectoral point of view, what are you looking at?
I think, the cabinet and the Prime Minister have pushed on housing substantially, and I'm hoping that that thrust continues. So nothing in particular, but I hope that they keep doing more of the same. As you know, that certain announcements have been made recently, which bode well for affordable housing. So I'm hoping that they continue with similar policies in the future.
All right, Keshav, appreciate you joining in. You're sounding quite optimistic about the rest of the fiscal year, and you're saying Q1 wasn't too bad, irrespective of the elections or any kind of slowdown talks. Thanks a lot for joining in and filling us in with all of those details. Well, let's focus on another company then, Mishra Dhatu Nigam. Well, the company in their Q4 conference call said that they are in talks with Pratt & Whitney for potential supply of engine components. So what's the update on the same and how is business shaping up? Well, to help us out with that, we're joined by Mr. Sanjay Kumar Jha, the chairman and MD of Midhani. Hi, Mr. Jha. Good morning and thanks a lot for joining in. Well, I went through your con call, and you had briefly mentioned about Pratt & Whitney and there could be potential orders coming in there. And yesterday there were, various reports that suggested there was some progress on that front. Could you clarify, is there progress on the Pratt & Whitney front? And could you quantify what could the revenue potential be?
In fact, recently we have started giving our material for their requirements. And in these sectors, first of all, you have to really certify the material. The quality part has to be certified, and quality management system also should be certified for the company. So we are in the process of doing that, and many rounds we have discussion with their team, and they have also seen our facility, and more or less we have come to the stage where they are satisfied with our facility. So and based on some initial material which we have supplied to them of the right quality, right requirements, I think we are in a right path to get some breakthrough. And as and when it will come to that final one, I will definitely inform. But it's not only that Pratt & Whitney, that since Midhani is having a lot of that opportunities coming in the especially in the supplying the potential material for aero engine, or I'll say that in the aerospace industry, which includes our domestic requirements and coming from the developmental activities of DRDOs, and also many things in our HAL. So based on that foundation, we are able to meet their expectations. Okay. And since the requirement, their volumes are quite big, so it will be possible to get the very good business in the future. So that we are at this stage.
So you'll have already started supplying some material, but when does commercial sales start from Midhani to Pratt & Whitney? Do you see it, pick up steam in the second half of the year? And for FY25, what could the revenue potential be from Pratt & Whitney? Or if this year is still going to be ironing out everything, for FY26, what could the revenue potential be?
Revenue potential for FY25, I'm not seeing much. In fact, it will be mostly in the area of certification and qualification of our facility. But I say in the last quarter of FY25, we may see some in the range of 10 to 15 crores worth of supplies. But definitely it will it will convert into the higher volume right from the next financial year, that is from FY26.
Pratt & Whitney could contribute close to around at least 60-70 crores in FY26?
Yeah, definitely. If that part is getting converted, we have to only see that how much we can absorb, we can supply, because we have to also see our Indonesian program for our domestic requirements. So based on that, we have to decide. But moment we are through in that all qualification and all, this much potential is there in the business.
Okay. That would be a good deal, sir. And on a lighter note, maybe Midhani will add the magic touch, right? Once you start supplying to Pratt & Whitney, maybe their engine issues get sorted out, and maybe we get better delivery of all their planes. It's a very prestigious logo, definitely, for you. All right, sir, just to talk about the other deal as well, we heard yesterday that there is a RFP, for 156 light combat helicopters from HAL. How big is HAL a partner for you? And when a RFP of this size comes along, Typically, what does that mean for you in terms of revenue opportunity? And what is the contribution of defense in your total revenue pie as of now?
First of all, I'll talk about this LCA. For LCA, already we are supplying the material regularly for the requirements as far as the titanium alloys are concerned, super alloys requirements, and special steels. So already we are supplying. In fact, for Mark 1 and now the Mark 2 development also is going on. So there also our material is going for the developments and all. So we are very well in that portfolio. And then the volume of the business, what I say that depending on the number of aircrafts and all, it will be coming in the future. I am right now I am not having the correct picture, but you can say that whatever the material they need for titanium and super alloys and special steel, Midhani material is already certified, and we are going to supply those things. In addition to that, the defense.
Defense. Just to get some numbers out of your total revenue, how much is defense? And what I was trying to understand, since you already have a relationship, you're already supplying these parts, when such a large order for, let's say, 156 LCAs comes, it's spread over a number of years, but typically, is there a pop in terms of the revenue opportunity for you? Because they'll require that much more, obviously, material and minerals and metals that you will supply.
Today, my defense order book is almost 80%, 75 to 80% we are having. And in that, only specific to LCA, very difficult to differentiate. But you know that all these platforms, whatever they are asking, it will be spread over the next 4 to 5 years, sometimes the 6 years. So that the material supply will not be at one time. It will have also in a staggered manner. So I am finding that definitely it will be around 60 to 70 crores in that range per annum coming from that sector, definitely.
Okay, all right. 60 to 70 crores of business coming from HAL with regard to this particular LCH, that's light combat helicopters, right, sir?
Yeah.
Okay, let's get a couple of quick numbers before we let you go. What is the updated order book? The last recorded number we have is around 1,500 crores. And 80% of the order book as well as defense, the remaining will be space?
Yeah, remaining space we have around 10 to 15%. Space has come down drastically because now space, the new things are now coming up. So it will be adding further. In addition to that, now we have something coming from the energy sector, something we are getting from the export market. Export has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market.
Got it. All right.
Which includes that whatever we have discussed about that earlier company also.
And the order book is 1,500 crores, sir?
It has crossed 1,700 now as on today, but
got it.
But we have other indications also.
Leave us with just 2 numbers, sir. For FY25, we've got a sense about business. Pratt & Whitney starts contributing in a small way, and the next year looks even more promising. But for FY25, what kind of a revenue growth can you deliver? And the margins have been fairly volatile. What is the range we should work with? Just 2 numbers, revenue growth and margins.
Revenue growth, last year, the way we have done crossed almost 23% we have the revenue growth. We will maintain the same momentum this year also. And regarding the margin, last year it was got affected mainly because of the fluctuation in the raw material price, which has gone up it was a lot of initial 3 quarters we have a lot of outflow because of the higher raw material input cost. So now I am seeing that this year probably that will not be the region. So the margin will definitely try to improve there over the period of time.
Give us a number, sir. Margins will be what, 20%, 25%?
Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Got it.
Okay, all right. We will leave it at that. Thanks a lot for joining in. By the way, the market is getting a bit volatile. Not too much, but the Midcap index is now down about 250 points. Sensex and Nifty are just hanging on to the green line by the skin of its teeth. So let's see which way it goes. Mitesh Thakkar is joining in now. Mitesh, little bit of volatility kicking in, but for the rest of the trading session, how are you approaching it?
So, Tony, I think we discussed this in the morning as well. It is the bank Nifty and the financial which are, showing clear signs of breakouts, and I think that's where the action is happening. A lot of buy calls, buy signals on the financial name. So I have a buy on Investment Bank with a stop at about 1530. Look for a target of around 1585 here. And one sell because, as you rightly said, there's some, profit booking seen in the broader market. So Hindalco is a short-term or an intraday one-to-day kind of a sell with a stop at 681. Look for targets of 650 here.
Okay, all right, got it. Mitesh, thanks very much for the trades. We'll touch back base with you in some time. We have to take a break at this moment. Up next, Manisha with all the commodity cues of the day. Okay, shifting focus to commodity markets now. We have Manisha joining in. Manisha, good morning. So what's the commodity on your radar?
So I'm looking at the crude oil prices because we've seen constant gains come in for this one. Well, last week was the first weekly gain after 3 weeks of decline. So we saw 4% of gains in the previous week. But overnight, it has been 2% of a jump up that we've seen in case of crude oil prices. And in this year, until now, it's 11% up for Brent and 13% up for the WTI crude oil prices as well. And it's not just the crude prices. The products have been doing quite well as well. But coming to the crude prices, and if you look at the way the month of June has panned out, we did not start June on a very strong note. Actually, we have seen a low of $77.5 a barrel on the lower side as well. But from where we've climbed up to almost 86 in the Asian markets today. So that has been almost an $8 of a jump up in crude prices from the kind of lows that we have seen in the month of June. So that's quite strong there. But as I was saying, the product prices also have been jumping. So if you look at the gasoline prices, they gained up by 1.5% overnight, 18% up in this year, 4% of gains for natural gas overnight, and 16% up in this year as well. So most of the crude and the crude products have been gaining on the higher side for the last 1 month or so. And where various factors for that as well. If you look at the summer demand in US, that is expected to be on the stronger side, and that can lead to a draw in inventories. Well, there are various polls suggesting that you could be looking at almost 2 to 3 million barrels of a decline in this week itself. The other factor clearly comes in from China, where the May retail sales data has come in stronger than what the street was anticipating. So any strong number that comes in from China, the street starts to believe or wants to believe that you could be looking at the crude demand improving. So that's a sentiment impact there. The US crude inventories have been declining for last 3 weeks, and this week as well could see a 2.3 million barrels of a decline. The other factor clearly comes in from the US retail sales itself, where the data has come in weaker than the street anticipation. That has led to a dollar decline and an expectation that you could be looking at a rate cut coming in for the month of September. That probability also has increased to almost 68% from 55% in the previous week. The fourth reason is the geopolitics, where the Ukraine drone strike has caused a fire in fuel tank and oil terminal in Russia's Azov port. So that's another reason to take prices on the higher side. And that is there is various statements also coming in from Israel saying that there is a decision perhaps coming for sure where they would go out on an all-out war with Hezbollah. So these are the premiums that also seem to be coming back in case of crude oil prices. But mostly it is short covering from the speculators that has taken the prices higher. And as happens in case of crude prices, once you see this movement pause or halt, you could be looking at profit taking coming back as well. But many of the banks and brokerages believe that with the kind of deficits that we are looking at or withdrawals in case of crude, the third quarter could see higher prices for markets.
Okay, all right. Thank you very much for that, Manisha. With that, let's come back to the equity street and talk about some of these marquee block trades that have been underway. Nimesh is joining in. So, Nimesh, on Indus, most of the blocks, are they done, or I don't know, it's still being executed, considering it was a massive amount that that was being sold?
Well, it's a done deal now, Surbhi. So 20% equity has got changed hands. So Vodafone has sold their entire stake. So they were running close to 21.5, and the nearly block is around 21%. So looks like it's a clean out trade as far as Vodafone is concerned. Now the deal got executed at the lower end of the price band, which is around 312 rupees per share. Now in terms of buyers, I understand the indication even in the pre-open was that some domestic mutual funds were anchor investors, couple of FIs, including hedge funds, were buyers. And so is the one of the large, strategic holder is also a buyer in today's block deal. So the disclosures could be quite interesting. My sense is Bharti would have participated in today's block and increased the stake to close to 50%. That was an indication in the bid. So that confirmation needs to be seen. Now, what happens post deal? There are a couple of alternatives who have written notes on Indus Tower, and they believe that because the promoter holding has now gone down, the free float has gone up. The weights will increase in both MSCI and FTSE. For MSCI, the indication is that this could mean an inflow of close to $100 million. And in FTSE, the indication is it could be an inflow of close to $53–57 million. So you will see close to $200 million of passive buying in the next few days, since now that the block is done. But I guess what to watch out would be in terms of confirmations on some large buyer names that will come post markets today.
Okay, all right. Got that, Nimesh. Thanks very much. That's a large block on Indus Towers, and it's finally been completed. Thank you very much for that. Let's move on and talk about Zomato. Zomato has been seeing some interesting price and volume action. Of course, the street seems quite excited about the prospects of a deal fructifying with the Paytm for their entertainment and lifestyle business. Manglam, what's the latest?
Well, the latest is brokerages are now taking note of that. And yesterday, there was a bit of sell-on news coming in for both the stocks Paytm as well as Zomato, but today it seems to be picking up once again. UBS has written that Paytm's ticketing business actually fits in well with Zomato's going out offering. In fact, back of the envelope calculation suggests that at around 1,500 to 2,000 crore, the valuations at which Zomato will be buying this business will also be fairly reasonable. And as a result of which, they haven't made any tweaks to their estimates yet until the deal does fructify. But if it does, it would be a positive for a business which, gave them about 258 crores of revenue in FY24. That's the going out business. And as a result of which, they have a buy rating and a target price of 250. So Zomato is doing well.
Oh, it absolutely is. In a market where actually, non-index names are not doing that well. Manglam, thanks for that. As we take the final break and before we hand it over to It's the Economy, the Midcap index is down 0.6%. So there's a lot of profit taking in the broader market that one must note. And the advanced decline ratio is already negative so far early in the morning. Otherwise, the Nifty is flat. The Bank Nifty, by the way, absolute flyer on the Bank Nifty. Look at that index go 1.5% up. That FPI buying has started coming in, and it's really showing up in these large blue chip banks. But yeah, the mid-cap space is where the concern seems to be for the bulls. Let's take a quick break. On the other side, we'll have our special segment, It's the Economy. Lata will get chatting with the Money of MS Money of Deloitte India and Vivek Johri, former chairman of the Central Board of Indirect Taxes and Customs, to talk about expectations from the GST Council meeting. Stay tuned.
Welcome to It's the Economy. The GST Council meeting on the coming Saturday has elicited high market interest on hopes that some big changes may be announced since it's coming before the budget. For instance, experts are hoping that the number of slabs may be reviewed and the government may do away with the 12% slab, divide the items to the 5% and the 18% slabs. But my colleague Timsi Jaipuria learns that fertilizers may not be fully exempt from GST because the industry is complaining that that will lead to duty inversion and therefore a locking up of capital. Meanwhile, gaming companies and NBFCs are also nursing hopes about GST exemptions or reductions. To discuss what changes we may reasonably expect, I have with me Mr. Vivek Johri, is the former Central Board of Indirect Taxes and Customs chairman, an expert on direct taxes, and Mr. MS Money, the GST expert from Deloitte. Gentlemen, good morning and thank you very much for sparing time for us. Mr. Johri, first up to you. New government and, hopes that it is coming before the budget. So you think something as radical as removal of a slab will be even mooted?
Thank you, Lata, for having me on the show. In my view, this is a preliminary and the first meeting of the new government. And we must also remember that it is in the context of the budget, which is likely to be presented in the third week of July. So I think that what the council would look at this stage are issues that mainly involve legislative amendments. Also, I would remind the viewers that, on the rate rejig, that is reducing the number of slabs from 4 to 3, there was a group of ministers which was set up long ago. They'd given the interim report, which was in June 22, that was implemented, and which recommended, if you recall, a large number of withdrawal of exemptions. The council had approved those changes. Some clarifications also given about rates. What remains is the larger chunk of the mandate that was given to the group, which was, how to condense 4 slabs into 3. As far as
No, there is no, the final report of the group has not been submitted. It works under the chairmanship of the finance minister of Uttar Pradesh. So I think having set up a group of ministers, the council would like to await their recommendations before taking a final call. In any case, that does not involve a legislative amendment. It can be done by notification.
So, a short point, we mustn't pin our hopes high on that process getting any acceleration, correct?
That's my view. That's what I think.
Okay, I've got larger questions for you. But Mr. Mani, if this big thing is removed, what can we expect? I mean, Mr. Johri is speaking of legislative changes, and I'll go back to him on that. My colleague is picking up that fertilizers will not be fully exempt from GST because that will mean that there is an inverted duty structure. Do you think this will be followed up and even textiles could be included in this?
So the way I look at it, Lata, is the fact that this meeting is coming at an interval of 8 to 9 months after the last meeting. And we have not had such a long interval in the recent past, in the last 2-3 years or so. We used to end up having a meeting once in 3 months, 4 months, or 5 months. And GST being a transaction tax, it is more like a business tax. We actually need a meeting every quarter because the issues that crop up for various businesses, the only body which can address it is the GST Council.
Okay, so what should we reasonably expect?
Absolutely. So this particular meeting, as Mr. Johri said, we should keep our expectations on the lower side because they are meeting after 9 months. They'll have a lot of items on the agenda. Fertilizer could certainly be one item, and the fact that the industry itself is saying don't exempt it because it leads to an inverted duty structure is a welcome change. Because in the past, we have seen various businesses lobbying for a change and then going and saying we have an inverted duty structure, what do we do with the credits that we have? Equally, there are a host of issues that have cropped up due to various investigations conducted in the last 6 to 9 months or so. And many of these investigations have resulted in very large demands, some on listed companies and some on unlisted companies. And most of these businesses will be looking for some clarity, some guidance from the GST Council meeting when they meet now.
Okay. So some kind of overall, cleaning up or speeding up of processes. Mr. Johri, you specifically said that where legislative changes are needed. Can you be more specific? What is in your mind? What should we expect item-wise, product-wise? Mr. Johri? Oh, okay. I think he was adjusting his camera. We should get him in just a minute, if not on video, at least on phone. Mr. Mani, what are you expecting something in terms of relief for the NBFC companies? We heard from them that co-lending is coming under GST and they are against it.
So co-lending coming under GST is certainly a matter which needs to be resolved. You were also mentioning legislative amendments.
Yeah.
So one of the expectations that we have on the legislative amendments is that business practices that are specific to a business will be respected by the GST processes and the GST law. Each business process, so in NBFC you mentioned co-lending. Similarly, in case of the insurance industry, we have issues relating to reinsurance and co-insurance.
Yeah.
We of course have online gaming in where the valuation rules are coming into play. In each of these, what is happening is that the GST law is not recognizing the business practice, and it cannot obviously recognize all the divergent business practices across the country.
Okay.
So what is required is actually an umbrella provision where the government and the tax authorities have the power to respect the business practice and grant relief to a particular industry. That is one of the key expectations that all businesses have from this particular meeting, where possibly an enabling provision will be introduced, which permits them to take into account the practice of a specific business and then issue a notification pertaining to that particular business.
Okay, got it. Mr. Johri, would you want to comment on that? Whether you expect, a greater discretion at the hands of the tax authorities to respect specific businesses? And secondly, what you alluded to, topics where legislative changes are needed. What did you have in mind?
Yeah, so thanks, Lata. Look, I don't think we would have a provision where tax authorities at the field level would be given this discretion. I think what Mr. Mani also suggesting is that there would be a legal provision by which the council would approve the recognition of certain practices in certain lines of industry or business, that would be recognized for the purpose of GST law. That's a fair ask, and that may happen. What I'm expecting also is that there is this issue of retrospectivity of some of the clarifications which the GST Council has given in the past, or amendments that have been made to law to clarify a certain position. And there is a possibility, taking a cue from what was there in the earlier indirect tax laws, there is a possibility of introducing a provision by which you recognize and exempt the tax in case there was a general practice of not paying that tax in the industry because of an interpretation that the industry had been adopting as a matter of general practice. So if you recall, both in customs and in excise law, there was such a provision. And the council may well consider, introducing such a provision in the GST law as a means of ease of doing business.
Okay. So general market practices may be given recognition through some suitable amendments. Mr. Johri, the great body of viewers at this point in time on CNBC are people who are invested in stock market in various sectors. Is there any sector that we should keep on our radar, like NBFCs and co-lending, or like gaming, or fertilizers, or textiles?
Well, I think these are issues that have come up from time to time. You have the issue of corporate guarantees. There was some lack of clarity which was flagged by the industry with regard to that, for instance. Then there are some follow-up decisions, follow-up on decisions that the council had earlier taken. And I recall at the 51st meeting, the council had asked the law committee to work out an exemption for extra neutral alcohol. So I think those are the kind of legislative amendments that may go through. There may be some relief given, if I may call it a relief. There may be some facilitation done, for instance, in filing of returns. And there has been this debate about what is the correct sort of record for the industry to assess the availability of ITC at a particular point in time when they're paying the tax on the 20th of every month. So if you recall, GSTR 3B has been, accorded that, 2B and 3B have been accorded that status. So if we have to freeze that, then there are invoices and documents that get left out and for which the business is not able to take credit in that month. So there should be some document by which they can transfer this credit to the next month's account. And that may get facilitated. I'm also taking a cue from what FM said soon after taking over, and she emphasized, the need to do more work on ease of living and ease of doing business. So I think there would be some facilitation measures for sure in this meet.
Yeah, we understand that there can be a specific level, say 20 crores, you go to the appellate authority, more than that, go to the High Court. Even those kinds of ease of doing business is expected, we don't know. But Mr. Johri, finally, we are ahead of the maiden budget of the new government. Therefore, can there be something which dovetails both of them and that, we as investors and taxpayers should keep in mind?
Dovetail with what? I'm sorry.
I don't know. Something that is announced in the GST Council and which may, find fuller play in the budget. See, GST is not the central government's preserve and therefore is not linked to the budget. But, the taxpayer and the economy view it as both as tax authorities of the government. Will there be any connect? Anything that occurs to you that can be common?
That's why I mentioned to you, Lata, that, the changes that would mainly be looked at would be legislative amendments. Okay. And, there could be, for instance, I'm just loud thinking because this has also been a demand of the industry. There could be a reduction in the pre-deposit amount for filing an appeal. Currently, as you're aware, it's 10% of the disputed amount or 25 crores, whichever is lower. So the council may want to reduce this because many taxpayers have flagged this issue of having to expose themselves to this,
Huge
payment.
amount, yeah.
Yeah, before they can file an appeal. This will again involve a legislative amendment because 10% is mentioned in law. So those are the kind of things that I think can get dovetailed. Corporate guarantees is another one that I can think of. There's a lack of clarity about recurrent guarantees and whether the 1% will apply to a one-time thing or for the entire tenure of the. Yeah.
Okay, there's a lot then for the tax authorities and for companies to watch out for in the GST Council meeting and in the budget. Thank you very much, Mr. Jory and Mr. Money. Lots of things on the market's mind. Gaming would be on top of it. Fertilizers, NBFCs, all of them are eagerly watching what the GST Council might say. But we will know that on Saturday. For the moment, it's a wrap with Bazaar. Chartbusters coming up.
Indus Towers under pressure after over 20% equity changes hands via block deal. Sources tell CNBC-TV18 Vodafone has likely sold 20% at an average price of 312 rupees per share. The stock falls nearly 5%.
Fertilizer stocks, Chambal Fertilizer, RCF, and fact gain. Sources tell CNBC-TV18 that the Fitment Committee has recommended further deliberation over proposed GST cuts on fertilizers, as a blanket exemption could lead to duty inversion and blocking of capital.
Sansera climbs more than 5% after nearly 12% equity changes hands in multiple large trades. Sources tell eBean and CVCIGP are the likely sellers.
Gold jewelry stocks, Kalyan Jewellers and Senco shine after brokerage firm Motilal Oswal initiates coverage, citing that they're optimistic of the jewelry category and see a strong trend in formalization.
Le Travelers Tech, or Ixigo, rallies for the second day post-listing on the exchanges. Now the stock has moved to 2 times the value of its issue price at 93 rupees per share.